Most traders spend years staring at candles trying to figure out where price is going next. Support lines, resistance lines, RSI, MACD, moving averages, all of it. And it all comes from being derived from the same price they're trying to predict. Today I'm going to show you what exactly is actually underneath that candle. What is the candle hiding from you, and why once you see it you cannot go back. Now, this candle tells you four things: the opening, which will be the low, the closing of the candle, which will be the high, and now vice versa. When it's a bearish candle, this is the opening, which will be the high, and the close, which will be the low. That is the summary of everything that happens in that time period. That is absolutely it. But inside this candle, there is a conversation that is happening, which is between the buyers and the sellers, between aggression and resistance, between institutions positioning and retail reacting. That conversation is order flow, and today I'm going to be teaching you how to read it. Okay, I want to show you something important. This is what most traders see: a candle, a body, and a close. That is the information they are working with. Green candle, buyers won. Red candle, sellers won. This is the entire analysis that most people use and see. But if we look inside that candle, we saw 16 by 17 at one level, and we saw 13 by 7 at another, and 6 by 15 above. None of that is visible inside these candles. So the moment we switch to footprint, everything changes. Now I can see where the real aggression was concentrated. I can see which levels had imbalance between the buyers and the sellers. I can see where the market found the resistance and where it moved to freely. Let's look at this level right here, 13 by 7. 13 aggressive sellers against 7 aggressive buyers. Sellers are dominating at this price, and this is not random. This is what we call a imbalance. The sellers here are more aggressive than the buyers, and price is reflecting that. Now let's look at this section right here, right above it, 6 by 15. 6 sellers, 15 buyers. Okay, complete flip. Buyers are now more aggressive up here, 2 levels apart. Completely different story. The candle on the outside shows you nothing about this. Nothing about this. Just a bar on a chart. This is why candlestick traders are always one step behind. They're reading the results of the auction while I am reading the auction itself. The candle is the shadow and the footprint is the light. We looked at the footprint. We saw the numbers at each level. Now I want to introduce you to the single most important concept in order flow: delta. Delta is simple. It is the difference between aggressive buyers and aggressive sellers at each price level. Buyers minus sellers, that is delta. Positive number, more aggressive buying than selling at that level, which will be the green. Now negative number would be more aggressive selling than buying at that level, which will be the red. Now look at this candle right here, okay? Same candle that we previously touched on. So up here at the top of this candle, we have positive delta, 1, 3, 1, 5, 9, 9, all within this range right here. They are coming in to the market and they're taking contracts at the ask, as in they want to get in the action. So now if we look at the bottom half right here, it's the same candle but with negative delta, -5, -6, -2, -3, -3. This is completely red. And down here are the sellers that are more aggressive. They're hitting the bid, wanting to push price lower at these levels. One candle, 2 completely different stories. As you can see, the information makes a crazy difference. So the top of the candle, the buyers are in control. The bottom of the candle, the sellers are in control. This tells me exactly where the battle is being fought and who is winning at each level. Now, here is what makes delta powerful. this is something most traders never understand. Delta could tell you when a move is lying to you. If price is pushing up, but the delta is getting weaker with each candle. Fewer and fewer aggressive buyers are supporting that move. That is considered a warning. That is telling you, be careful. The move does not have to have real conviction behind it. If price is dropping but the delta is turning less negative, as in the sellers are exhausting themselves, that is the signal that the downside is running out of fuel. Delta is not telling you where price went. Delta is telling you who is fighting, how hard are they fighting, and whether they are winning or losing. This is information no candlestick will ever tell you. This is the information that will give you the absolute benefit and the advantage when it comes to trading the market. Before I show you the absorption, I want to show you one of the tools that I use to filter the noise out of the market. This is the big trade filter. What it does is simple. It filters out the small retail traders and only shows me the most significant cumulative order clusters in the market. I currently use minimum of 10 contracts and a maximum of 1,000. This is now cumulative trade modes. I only want to see where real size is being placed, and this indicator is doing that exactly. So now let's look at what it gives me. On the left side I'm on 1 minute time frame chart, and on my right side is my 5-minute chart. Same market, same moment, two different time frames giving me two different layers of information. Now on the left side on the 1 minute time frame, we are seeing three significant cumulative order clusters appearing in the sequence of 67, then 54, and then 57. These are not small random trades. These are filtered clusters of real size hitting the market in the same area repeatedly across multiple candles. Now the question I always ask when I see this is simple. What is price doing while all this size is coming in? So price drops around 479, and then within the 67 clusters then tries to recover. Then about 54 clusters appear, and then 57 clusters appear around 484 and 485. There is a battle happening right here between 4079 and 4085. Size is entering on both sides of this range. So now let's focus on my 5-minute chart. This is where it gets clear. Look at this zone right here. Okay, I marked this with the box right here at the very bottom between 4074 and 4079. Price comes down into the zone, and look at what happens. It gets held repeatedly. Price tested this area and it cannot break through. It bounces back over and over and over. This is because there are resting buy orders sitting in the zone. Passive participants who place limit orders here are saying, I want to buy gold at this price. I am not moving. Every time aggressive sellers are trying to push price through this level, they get absorbed. The passive buyers at this zone take every single sell order thrown at them, and price could not close below it. So let's look at this. Look at what happens after. Once the sellers exhaust themselves from trying to break that zone, they run out of ammunition. Price rips higher every time it taps that zone, all the way to 40, 88, and even more. Higher. So that move did not come from nowhere. It came from the absorption that happened in that box. Every single seller who tried to push through that zone got absorbed by the passive buyers, and when the sellers were done, only the buyers remained. So this is how I use multiple time frames together. The 1 minute chart shows me the order flow activity in real time, where size is entering, and where the clusters are forming. The 5-minute chart gives me a better picture with more context, where the key zones are, where price is being accepted or rejected, where the absorption is happening at a structural level, and the big trades filters removes the noise and shows me only what really matters: real size, real participants, real market structure. I didn't just draw a support line here. I don't need any of that. I don't need an indicator to tell me when to buy. The market tells me directly through the order flow that buyers were defending this zone I just had to read this. I want to show you something that explains everything about why I trade gold and why I traded during the Asian session. What you're looking at right now is trading view on the gold spot chart on a 15-minute time frame, and it's 2 full trading days, Thursday and Friday. And every session, as in Asian session, London session, and New York session, is marked out so you can clearly see exactly what is happening and when it happened. Now, notice that gold is never stopping. It's always continuously moving. So now, let's look at Thursday's Asian session. Look at this range at the session created. Price moved, established a high, and then established a low, giving a clear directional move. This is not dead. And there's no thin, meaningless price action. This is real participants from Asian institutional players, central banks, commodity traders, macro funds, all active during these hours. Now let's look at London session box. You see that London opens, and then London picks up where Asia left off. Price interacts with the levels created within the Asian session, the Asian high and the Asian low, and then continues the auction. Look at how price respected the Asian low down here. It comes back to test it, finds the buyers, and then London takes the price up even higher. Now let's look at New York session. Then New York comes in. You can see the New York session highs and the lows marked, each session leaving a reference level that the next session has to interact with. This is a continuous nature of gold. It doesn't pause, it doesn't go quiet, it's active, always active. It transitions from one session to the next and continues moving forward with genuine participants the entire time. Now if we look over at Asian session for Friday's session, right here, look at the range. Price came in, pushed up, and massively sold down. This is a massive range during the Asian hours. Hundreds of dollars of movement on gold during that session that most Westerner traders would completely ignore. Now, then, let's look at what happened when London opens on Friday, okay? If we see during the London session, price has created its own Asian range, okay? London comes in, it interacts with those levels, price explodes higher, all the way from the Asian low, moving up from 40.40, 40.50, 40.80, beyond into New York session. That entire move started from the foundation that the Asian session built, and that became the reference point that really drove the rest of the day, just driving price up further up. 2 consecutive Asian sessions, both showing genuine directional moves, both creating levels that mattered for the rest of the trading sessions, London and New York. Both are giving me real order flow data to work with on my footprint chart with the big trades indicator. So let me ask you something. If I was trading Nasdaq during these same hours as in the Asian session, what would I see? Absolutely nothing. Small candles, no volume. The order flow data will be so sparse, it will become meaningless because there's no liquidity, because all the liquidity of Nasdaq lives in New York. During Asian session, it's pretty much sleeping. Gold is alive at 5 in the morning. Gold gives me footprint patterns, real delta signals, real absorption to read during whatever hours I want to trade. And that is not a coincidence. This is why exactly I trade gold. This is why I trade the Asian session, and why I can trade the London session and the New York session. The market gives me everything I need to apply order flow analysis during whatever hours I want to trade. The data supports it every single morning that I sit down and trade, every single afternoon that I sit down and trade, and every single night that I sit down and trade. So let me bring everything together for you. We started with the 2 forces, the aggressive participants and the passive participants, the engine behind every single price movement that you have ever seen on a chart. We looked inside a candle with the footprint and saw what the candlesticks have actually been hiding from you this entire time. Real executed orders, real transactions, the actual conversation that buyers and sellers are having at every price level. We talked about delta, the difference between the aggressive buying and the aggressive selling, and how it tells you who is winning the battle before the candle even closes. We looked at absorption, what it looks like when one side throws everything they have at a level and it goes nowhere, and why that is one of the highest convictional signals of all of order flow. We looked at gold, 2 full days of Asian sessions moving hundreds of dollars, creating levels that drives the rest of the trading day while most traders are still sleeping. Okay, keep that in mind. This is not a strategy that I bought. This is not a signal service. This is not a course that promises you a shortcut. This is a way of reading what the market is actually doing in real time. And it took me hundreds of hours of screen time, of being wrong, of unlearning everything that I thought I knew about trading to get here. I'm not sharing signals, and I do not tell you what to buy or what to sell. What I do is teach you how to read the market yourself, how to see what I see, and how to develop a real and your own understanding of real market structure so that every decision you make is grounded with all of the actual data, not no patterns or someone else's call. So, if you want to go deeper on everything that I just showed you, the software I use, the data feed, how to get your setup built from scratch, the instruments, all of it I put together in a complete written guide. Everything is free, everything is in the community. So, if you also want to watch this happen in real time, I stream every single weekday on my website, and the replays are posted in the community after every session. Remember, the markets do not lie, neither does the work, and I will see you in the next one.